Thank you very much, 274 and Batseta Council for Retirement Funds, for hosting this very important event. It's an honor and privilege to be here today. Talent is universal, opportunity is not. The history of the institutional investment industry in South Africa began close to 2 centuries ago when British insurance multinationals first arrived in the Cape. The existence of a well-structured, formalized savings sector, driven initially by the life insurance industry, and the emergence of a strong pension fund culture, given impetus by the passing of the Pension Funds Act in 1956, had a significant influence on the development of the local economy, capital markets, and professional asset management over the past 60 plus years. However, it is 32 years since the first Black key investment professional, the late Shams Patha of then Southern Life, was recognized in the annals of the industry in 1989. It has only been 23 years since Mbezi Hayter became the first Black woman to head up an asset management firm. Early pathfinders paved the way for investment professionals like Sela Moloko, who in 2003 was appointed the CEO of Old Mutual Asset Managers, then the biggest private sector asset manager, a first for the venerable 158-year-old institution at the time. Broad-based Black economic empowerment legislation, sector codes, targets, and scorecards in the past 2 decades have bolstered skills development, been a catalyst for the participation of Black women across all the pillars of the economy, boosting Black business leadership and reshaping the competitive landscape. Legislation has incentivized the broader industry to improve the level of contribution a company makes to empowerment. The effect of the updated legislation has been an increase in corporate activity as firms sell stakes to Black owners to beef up their scorecards. And this, no doubt, has added some sort of excitement to people who put together these surveys, because how will they do that? What's the changes that are going to come through? And that will be interesting to see. But the idea of diversity in our sector is still in its adolescence. And the need to tackle imbalances of opportunity and access remain. Today, 274 unveils the 2021 industry report, now in its 13th year, that we may examine what is worth noticing, what is worth celebrating, and grapple with the challenges before us. It has only been 14 years since 274 was founded, rewriting the narrative of transformation and diversity and inclusion in South Africa. In that time, the firm has supported 45 Black-owned managers, fostering entrepreneurialism, growing investment talent, promoting diversity, creating access to opportunity, and removing barriers that many faced a generation or 2 ago. 274 has provided seed assets to 26 startup firms, 4 of which are woman-owned, enabling them to start investment track records. This achievement is well worth acknowledging as a bold step into a more equitable future. But Is it a moment to pop the champagne yet? The truth is that asset management is not easy and it requires a long-term perspective. Even with strong beginnings, not all of the startups established in the last 14 years have lived up to expectations. Indeed, not every asset management firm will survive the upheaval from the COVID-19 crisis. When asked in a 2011 interview how long it takes to build a successful asset management business, Hendrik du Toit, the CEO of 91, the biggest private sector firm in South Africa, ranked 128 in the world in 2019. Hendrik was unequivocal. It takes 25 years. 5 years to establish an investment track record. 5 years to draw clients. Another 5 to commercialize the business and take it to fighting weight. And a full decade to make sure that the entity does not wither and die. There are no guarantees of success in this business. It's clear. That said, 2 of the 5 fastest growing firms in the industry over the past 5 years to end December 2020 got that crucial head start from 27-4. We could say, to use boxing parlance, the first 12 rounds of this match are truly underway. And we can only cheer the commitment that 27-4 showed and the resilience these firms have shown. Interesting characteristics about these firms, well, they delivered competitive performance, had a defined style, told their story powerfully, and focused on building professional, well-resourced businesses. Moreover, 10 of the 18 independent firms, that is, those that are not linked to an insurance company or a bank, that are managing assets of 20 billion or more, are majority Black owned. But 5 of them graduated from the 27-4 Black Asset Manager Incubator Program. Fighting weight is well on its way to being achieved, and we can acknowledge the new players having entered the ring and may in time end up changing the rankings on the champions podium. That is worth noticing. That is worth celebrating. It is evidence that some Black-owned firms are beginning to find success in their specialized fields and rising up the ranks, both in terms of investment performance and assets under management. Most crucially, these firms continue to play a vital role in the transformation of the industry, particularly when it comes to hiring, training, and mentoring of young Black investment professionals. Deepening the pool of talent across and within the demographic spectrum is vital for the long-term sustainability of investment firms. The progress of transformation to date, therefore, exemplifies how collaboration between advisors and multi-managers like 27-4, asset owners, and unions, as well as government prodding, can transform and contribute to a more inclusive future and sector. And that is why 27-4's efforts today, shining the spotlight on diversity and inclusion, are so valuable. I will now turn my remarks to a little bit about the industry and how we've got here. It's fitting, therefore, that we know our history, to understand where we have come from, the sacrifices that were made for us, and what lessons we can learn for the future. That is now where I will turn my focus. In 1994, the imperative to make the economy more inclusive of the disenfranchised Black population and the need to transform the asset management industry was clear. Writing about the incredible challenges that lay ahead in their research, Professors Nicoli Natras and Jeremy Seekings observed, and I quote, "When Nelson Mandela and the ANC assumed office in 1994, they inherited an economy beset by problems. Over the previous decade, economic growth had been erratic and weak, with GDP per capita growing by an average of only 0.8% per annum. Investment had all but dried up, and capital was steadily draining out of the economy," close quotes. High in policymakers' minds was the need for public-private partnerships with government, or indirectly through funds managed by the sector, to invest in infrastructure to stimulate a struggling economy. Against the backdrop of an autocratic political system and a heavily racialized society, Black trade unions were a significant change maker in the story of transformation and diversity and inclusion. In the 1980s, they blazed the trail for transformation, leading the fight for financial inclusion, championing access to pension funds for all South Africans. As Graham Kerrigan, then CEO of Alexander Forbes, pointed out in 1996 in remarks to the Actuarial Society, if the trade union movement had not actively supported worker participation in the retirement funds, the current industry would have been substantially smaller. In 1996, 40 years after the Pension Funds Act was passed, the first dedicated piece of pension fund legislation in the world, workers' rights to have a say in the way their retirement funds were administered was enshrined in pension fund legislation. The new law upheld the requirement of a 50% board representation for members, another world first. The act of giving workers a voice in the management of their pensions was seismic in its importance to the transformation of the asset management industry. These gains were not merely remarkable, but historic and paramount to the overall growth and development of the asset management industry. Workers now had a say in how their savings were managed, by whom, and for what purpose, and this contributed to the emergence of a new generation of Black-founded firms. Blunt conversations with consultants, multi-managers, and asset managers demanding diversity led to firms changing the way they hired, developed, and promoted Black professionals into leadership and investment management positions, thereby increasing their number in the industry. But it was tough for these newcomers. There was a dearth of mentors for young, qualified, but inexperienced Black entrepreneurs and investment professionals, and few inclusive, informal, or formal networks existed that could provide support for the fledgling businesses. The institutionalized racism of the industry, with its often elite and closed-off networks, and its implicit biases, were another obstacle to contend with. So these pioneers marketed directly to clients, going to the grassroots of the country, building relationships with pension fund trustees who could drive transformation by nudging their advisors to broaden the universe of managers covered and to present inclusive shortlists for consideration. Workers also influenced early socially responsible investing, influencing that debate, significantly demonstrating that stock screening based on ESG principles did not necessarily mean foregoing investment returns. In 1992, Community Growth Fund, the first union-controlled investment portfolio, was established, and it set the stage for others that followed. The PIC, the government-owned asset management firm, started its BEE developmental program in 2009. According to the latest annual report, over 50% of externally managed funds that are allocated to domestic firms are invested with majority Black-owned firms, with 30% Black management control. The vocal advocacy of industry organizations such as Batseta Council of Retirement Funds for South Africa, the Transformation Action Forum, the Association of Black Securities and Investment Professionals, ABSIP, and the CFA Society of South Africa continue to generate greater awareness about the need to tackle transformation and the imbalances of ongoing opportunity and access. However, diversity is one thing. Inclusion, that sense of being recognized, being seen, or belonging, is another. Inclusion has to do with the culture of a firm. Now, a lack of diversity is sometimes linked to a culture of meritocracy. And there are those who hide behind that veil. As Jennifer Henry, the new CFA South Africa president, observed in a recent paper on diversity and inclusion, and I quote, she said, "We agree that meritocracy enables a high-performance culture, but managers should reflect on this from various angles and consider whether meritocracy is concealing conscious or unconscious bias," close quotes. Too often, diversity has translated into being on the fringes of an organization's heartbeat and looking in as an acknowledged observer. Inclusion incorporates the intangibles, the often ignored soft issues that have a significant impact on a firm's ability to deliver outstanding results to clients. And like diversity, where we can stand back, see, and take stock of things like racial and gender statistics and trends, an inclusive culture is harder to measure, but it is critical to ensuring that a firm is built to last. Just as a tree is recognized by its fruit, an inclusive culture is revealed by words and actions. History shows that firms that are open to ideas, that encourage responsible risk-taking, that demonstrate a culture of learning from failure as well as from success, that practice long-term thinking, that are competitive, that are collegial, and celebrate achievement. Those type of firms attract and retain outstanding individuals, giving them the competitive edge. While the longevity of firms is the result of the interplay of many factors, the ability of firms to reinvent themselves through innovative products and solutions that occasionally disrupt but add value to society is critical among them. This is not a new prerequisite for South Africa. Our financial services industry has been leading in innovation and disruption many times in the last 100 years. But if a firm values innovation, it stands to reason that it's a safe place to speak up with ideas. We need diversity of thought to come up with solutions that are relevant for all South Africans. If a firm has an inclusive culture, individuals are accepted and allowed to excel on the basis of their skill, insight, and genuine passion for investing without too many distractions. They have a seat at the table where they can just be themselves. If a firm is a fair place to work, you can assume there won't be short-termism that cuts special deals for different members of the investment team. When individuals shape their destiny and have an influence in the organization, they're more productive and are more likely to stay. So in conclusion, executives set the tone, and they need to be asking the right questions, and not only to themselves. Why is it that so few women are thriving here? Who do we have in the room when we interview new hires? When employment candidates sit across the table, do they see people like them? What are the 20-year consequences of not paying attention to transformation? Ultimately, companies that are more serious about transformation, that include both diversity of gender, of race, of sexual orientation, of disability, that include diversity and inclusion, will be the winners. Thank you.